Alright, and welcome everyone to another video. I know it's been a long time. It's been a very long time actually. And basically I've been dealing with grief because of the death of my beloved mother. I was not able to cope up with it, and I was not able to perform on the charts, market, whatever. I'm back now with another video. I've been active on the Telegram for a while, right? Been showing you guys some trades and everything. In this video, I'm going to show you a model which you guys can follow. And you guys can take this model for the rest of your life. And I swear by it, you can literally just stick to this thing which I'm showing and not do anything else. If you manage your risk and psychology properly, you will be profitable. And I want to show you guys something, basically. I'll be very transparent with you all. I don't want to lie or hide anything because that's what we do. Here is one of the accounts which I'm trading for a while now. Okay, it's been a while. Look, May 27th, right? And I'm just testing myself with something which is related, nothing to do with the model or anything. It's just to do with psychology and risk management. Psychology and risk management, nothing else. Okay. Here, the first trade I took was the day one, right? Here, you can see it was a break-even day, nothing else. From the first day onwards, I started to lose. You see, the June month, I started to lose 5th of June, 6th of June, 9th of June, and 10th of June. I lost, I guess, I reached up to 1.5% drawdown. But this was all under my risk and rule parameter. I didn't break my rules here, right? I didn't want to lose more. I didn't lose more. I didn't lose like a hefty amount of my account, right? So I was okay. And then it continued in an upward direction, right? Here, I lost a small amount. And then directly here, this was the trade, $1,000, $600. Here, what happened was I got overconfident, right? Here is the part when I started to break my rules, meaning didn't wait for my models, didn't wait for confirmations of the model, and just was a hasty trader. This is what happened. Here I was also okay losing this amount. Here you see that was a nasty ass trade right there. Here also nothing. Here small amount. Here it was an okay win, partials and everything. This is where my downfall began. 540, lost almost $754, right? Came very close to my minimum balance day. And then I reevaluated myself. I was like, okay, what is this? What am I doing? Right? And then I came back up again with what? Proper risk management and proper following of the rules. I risked very less here and as well here because I didn't want to go back below the $50,000 threshold. And I climbed back up again. This was, I guess, Friday because I was a break-even day for me. I made some mistakes. Even though my direction was right, I made some mistakes. But I want to show you that if we follow our rules, it's possible, guys. It's literally possible for us to be profitable, right? What I want to show you here is a small trade which I took on wait up. Okay. Okay. So let me go to right there. Okay. We have this monthly cycle established already. All right, on a 4-hour time frame, we have this established. We have an SSMT with the, of course, ES, right? Plus we have an SSMT with YM, which is the Dow Jones. Okay. So the narrative is already established over here. we are anyways bullish. We came off from a monthly PSP candle, right? You can go back and check, and the higher draw is still higher. Like for me, I want to see this level hit. I want to see eventually Nasdaq to reach up to this level, which is 23,866. Okay, so now since we have this narrative already built up, right, and we have the new week opening gap right there. Okay, we came off of this new week opening gap, so I'll go to the 1 hour time frame from here. Now, since you have a narrative already established, which is the first stage, right? All you need to do is look for a second stage, which would be a weekly cycle, and then a third stage, which would be a daily or a microcycle. Okay, and if you have a skip in between, that's also fine. It doesn't matter, right? But for us, we didn't have it, right? Over here, we didn't have a, how would I say, a weekly cycle, right? How and why? Let me show you guys. Okay. Here what happened was we had a high established during London. Okay, this was the high. It was during the London session, like the early hours of the London session, right? And then what happened was we had another high established, right? You don't jump in like this. You just don't jump in. You don't like panic or something. You just let price do what it's doing until and unless you have something to do. Okay. Then what happened? Price came back down, went back up again, came back down. What price is doing over here is generating liquidity for the news which was later on at 8:30 that day, right there, right? We had news at 8:30 on Thursday. So I sent this in my Telegram group, and if you're new to the channel and you don't know about my Telegram group, you can just go to the description and click on the link which I've provided, okay? And this is the low resistance liquidity which was being generated, and I pointed out this liquidity which was being generated, right? And moving forward, we came into the open of the third quarter, okay? Third quarter. And the low of the previous quarter would be this one, right? The London session's low would be this one. Oops, sorry guys. And in ES as well, it would be this one. But if I'll go to YM, okay, the low of London session is this, right? Everything remains intact. And if I'll move ahead, we can see YM is getting closer to the London's low, right? Right there. Here, this candle. Here we took out at the open of 7 a.m., right? YM took the low of London as well as it took the low of Asia. Okay, here. Asian session low and London low taken by YM, while ES and NQ were showing some strength. What do you do right here? Go to the higher time frame, okay? You realize that your narrative is already established, okay? You have a clear liquidity zone which is resting at these highs, and you have a clear drawn liquidity which was generated before the news and before the daily cycle was formed, okay, on a 15-minute time frame if you'll check, right there, right? So if I'll go to the 5-minute, from here all we need is a confirmation of a smaller time frame from this one, okay? And if you'll check on ES, sometimes the assets you'll have to flip from one asset to another one, right? Because you might not see it in one asset, but you'll see it in another asset. Okay. But the thing is this: before the second stage or the third stage happens, you need to see the price being below a true open, or at least at the true open. Okay. If you're bullish, of course. In this scenario, we're bullish. Going forward, I want to mark out the 730, right? This is the 730, and we have the opening of 730 right there. Okay, 730 is what? The true open of the Q3, right? We have the true session open right there. I'll mark it TSO, right? So you guys don't get confused. And what do we have here? This is the beginning of the second quarter, right? Meaning the Q2 of Q3, right? And we already have established a sequential SMT. Do you guys see it? Now, this is something which I've learned from Bucko Trades. I'll write down his name here. Okay. You guys need to go on and check out his channel for you guys to understand what I'm speaking of. And this guy has provided a lot of value to the quarterly theory community. So definitely go on and check his channel. He doesn't even know me, basically. And, but I give my credits where they are due. Okay. So this is the candle which formed the sequential SMT. Okay. Now we want to see a close above this candle right there. Okay. And there are a lot of intricacies after this, like, it's not just this, but this is something which you can follow. You have a higher time frame already set, and then you have a 15-minute, like, the daily cycle, and then all you have to do is just wait for the third one. Or this could be the only setup, like stage 1, the daily cycle, and then stage 2 is the 90-minute cycle, right? You need to wait for a 90-minute cycle change in the state of delivery. All right. What qualifies a true change in the state of delivery is if you see price moving higher above the candle which created this low, or this sequential SMT. Okay. And for me, it would be, I would trade this one. Why? Because it's showing more strength, right? Instead of this, because this will be lagging behind. I know this, like, for a fact, right? So we go on and then we wait for the actual candle to be broken above, right? We have another sweep, if you see this, right? Some people might take this candle as the original sweep. Why? Because we had a closure below, right, in this candle. Anyways, this was the one which actually tapped in, right? But still, some might argue that this is the candle which was the one which created the actual sequential SMT. But for me, it's the first candle which taps it. All right, that's where I get my higher probability confirmations. Okay, then all I have to do is just wait for price to close on either one of the assets to close higher. Okay, and here we have it. Right there, we have a close above the candle which created the sequential SMT, plus that candle also is the true open, right? Where we want to buy at the true open of a session or below it. So I placed my entry here, okay, at this level, and this is where the price, or the video will get interesting, basically, because you'll see something on a lower time frame which might be helpful for your psychology. Okay, so stick with me in this video. This is my stop loss. Okay, this is my entry. If I'll play it forward, the moment I entered, we head straight into a drawdown. Okay. Okay, right there is the place which becomes really challenging for anyone who's out there trading. Okay, it becomes really challenging. Really, why? Because firstly, you are not used to this, right? We are not used to price hitting our stop losses. We don't We don't like it. We really want our entries to be flawless, and we want our entries to give us zero drawdown and directly just within one candle it should hit our take profit, which is not possible, not probable. Here a lot of traders would have panicked. This is where a lot of you would have closed the trade beforehand, or the moment you get this move right there, right? Now the confusion begins. Shall I close the trade or shall I leave the trade open? Shall I close the trade or shall I leave the trade open? Here price moves much more higher. Moves higher, moves again. See this? This is the point where you are literally at the peak of your confusion. Like, what the hell should I do? Shall I close my trade or shall I just let it be, right? Or most of you would have just kept your trade at break even. Why? Because you're seeing this on a 1 minute time frame. You're seeing this down move, right? And then you want to just be out of the trade or be safe from making a loss. And then you want to put your stop loss at break even, which is this point. But I'll just keep it like this. Suppose you have kept your stop loss at break even, okay? Here, it gives you a bit of relief that, oh yeah, thank goodness I kept my stop loss at break even. This candle right there. Why? Because you're thinking, okay, this is moving lower, this is showing its weakness, there is a sweep here, this is a liquidity sweep, we are above a true open, we would see lower prices because we have these equal lows here. That could be very well in your mind, but what happens is the moment you put your price at break even, your entry to break even, the algorithm comes back down because it wants to offload its own position, takes you out, bye bye, salam alaikum, and it does not even give any other choices or like any other entry point. It just keeps moving higher towards the draw. Why? Because the drawn liquidity was higher, it was not lower. There was no other drawn liquidity. Why? Because the narrative was set. So what I did was I placed my entry here, and then I placed my partials here, and then I left my stop at break even along with the partials. Once I took my partials, I left my stop at break even. Okay, and I guess it was this trade right there. You see, I took my partials here, and then I left. Like, the moment it hit, I put my stop at break even, and it hit my stop loss. I mean, it took me out right there, and then we had another crack in correlation, and that's another. Same story goes on and on and on. But the truth is this is the model which you guys can follow. Like, literally, this is the only model which you should follow. What do you need? Number one would be you need a clear draw on liquidity. What can be a clear draw on liquidity? Previous session high or previous session low, okay? Previous day high, previous day low, or low resistance liquidity, trend line liquidity, anything, okay? You need this first. Without this, all your ideas are useless. It's literally useless because you don't have anywhere for price to move on towards, right? Then once you have that established, you need what? A higher time frame SSMT, right? In our current example, it was the H4 or monthly cycle. And then you need a mid time frame, which is number 2, mid time frame, which would be a H1 or a weekly cycle. And in our case, it was not present, so we call it a SMT skip. Number 3, we need a lower time frame, sequential SMT. In our case, it was the M15, which is the daily cycle. Plus, to confirm this one, we had a 90-minute cycle, which just gave us a good guarantee of the narrative being probable, higher probable. Okay, and what do you need if you're bullish? You need to be at or below at least one true open. If you're bearish, you need to be at or above a true open. Okay, that's where you want to buy. And your stop loss will be at the invalidation. Right? Step in invalidation in our case, for me at least, it was this one. This level was my invalidation, and I would have not moved my stop loss, right, until this has touched or I see anything else above here. I didn't see anything at that point, so I didn't move my stop loss. I just let it be, and then price will do what it does. It's not guaranteed always, but it's always like 70%, 60% of the time it just plays out. Once you have these established, right? Where is it? Yeah. Once you have this level established, all you need is a true change in the state of delivery, okay, which would be the candle which makes the sequential SMT. If you have it on the lower time frame sequential SMT, it's okay, whatever. It doesn't matter if it's on the higher time frame or if it's on the lower time frame. Why? Because you need it to confirm your bias or your SMT. In this case, it was this one for me, because I was trading the pair which was showing me the failure swing, and this is the candle which created the SMT with ES. Okay, if I'll go here, you see, let me delete this. This is the one, right? Beginning of this session, right there. Beginning of this 90-minute cycle, right? This red zone which you see, it was this one, and it created the low, right? Creating or making this sequential SMT right there. So I had to wait for one of the assets to show me a closure above this high, right? In this scenario, we had it. Why? Because NQ was showing its strength. In this scenario, we didn't have it. Why? Because NQ was not showing, ES was showing weakness. You would have taken this candle as your true order block, okay? Why? Because we had a fair value gap over here as well, right? Right there. But for me, it was this candle right there. And we had a fair value gap here, right? And then the lower one. But anyways, I was looking at this higher one. And this was it. This is it, guys. This is the scenario or the model which you guys should be following. And if you like this video, do like and make some comments on it. If you need anything else, let me know. Apart from that, good luck and good trading, guys.